Good morning, traders. Chris Buss here with Traders Profit Compass. It's Tuesday, February 9th, and this is your morning look at markets. It's just about 7 a.m. as I'm starting the video. The major market indices are flat as a pancake this morning, so nothing much is going on at the index level. Gold is up nicely, and on the blog post this morning, in addition to some commentary regarding whether we've hit peak Musk or not, I talk about that yesterday, for the first time in quite a while actually, we saw both a falling US dollar and falling yields, bond yields, interest rates. We had the 30-year bond trade over 2% yesterday for the first time in quite a while. Was not able to hold those gains and then dropped back. We also saw the same thing in the 10-year yield yesterday as well, where yields backed off. So bond yields down, TLT higher. So for those of us that are interested in the reflation trade, or are trading dollar-sensitive assets like commodities, oil, banks, that kind of thing, are going to want to watch the yields in the dollar closely. And what's kind of interesting and what I'm thinking about, I don't have any answers, I'm just thinking about it. We've seen a strong commodity environment in the face of a rising dollar, over the last, 6 weeks, pretty much since the new year. The dollar has been on an upward trajectory. We've talked about the record short interest in the dollar, and commodities, oil have all been rising in the face of a stronger dollar, and that's not typical. In fact, the other day I talked about the divergence between equities and the rising dollar. A rising dollar is usually a risk-off indicator, and it really hasn't been that. Equities have been rising, commodities have been rising in the face of that US dollar, and the only thing to take away from it is that traders must feel that the dollar is going to roll over and then resume its downward path with the added stimulus and all that extra spending that's going to be coming down the pike. So we're going to have to watch that. But if commodities were strong in a rising dollar environment, what's going to happen when it rolls over? Is it going to go absolutely ballistic? So then you're in, then everything's back in gear with a falling dollar and a rising commodity market. After the commodities have already run, they could be in for, an even stronger push if the dollar really rolls over. And also, that's a good environment for precious metals as well. Gold has been trading with its historical correlation intact. That is, stronger dollar, weaker gold. Now, if the dollar rolls over, we should see a stronger gold environment. So I'm going to take a look at gold and GDX at the end of the chart set this morning, because we haven't looked at that in a while. There really hasn't been much to look at. Gold's been in a long sideways to lower consolidation. And you'll remember that there was a fake breakout that I bought several weeks ago, and then they faded that move. So I'm an interested party on seeing where gold's going to go in the future. So I've got some levels for you to take a look at. Not a ton to discuss here on our chart deck. We'll go through it. SPY 2 hour, we continue to just grind higher. And we've crossed this midpoint of this channel, and we'll see if this acts as support, which it often does. You can go back here, here a pop above, we came down, that line acted as support. Here it did as well. We dropped below. Here we were below a long time. That acted as resistance. So, do we grind a little higher and then find some support along this line, or do we fall back below and look for support towards the lower side of the channel? What I would encourage you to do is keep an eye on momentum, keep an eye on RSI. When you see this curve flatten out, and then put in your bearish PPO, high level PPO bear cross, and you see RSI roll over, that'll probably be a sign that this little, well, it's not a little run, it's this big run is going to back off a little bit, and you may want to use those as some cues to, be ready for a gentle pullback at least. I've raised up the stops here to like 388. Of course, you can set your stops wherever you want, but there's a ledge of support here at 388 on the 2-hour time frame. And I've also updated the daily EMAs where you would expect support or a bounce should price, fall away. Like it did back here where it found support exactly at the 50 EMA. So those values are there for you. Here's the 30-minute chart. I've adjusted this trend line just slightly. You can see that over the last couple of days, Friday, Monday, we make that initial surge, then we trade sideways for most of the day, and then yesterday we had a strong closing half hour where we popped 390. So watch this trend line. If you're an active trader, you can set your stops however tightly you want to manage your trades, whether it's at 390 or 388.50 on the 30-minute chart, or at an even finer scale if you're trading a 15-minute or a 5-minute chart. You'll have to set those levels. But we remain in an uptrend. There's nothing to indicate, any kind of big sell-off is imminent. Just set your stops and respect them. And if you're not in, I'd be looking for long entries, not short entries. So, pick your spots. We do have this declining momentum, so we do have some bearish divergences there. But honestly, they haven't meant much in this cycle, so they will eventually, just not now. 2-hour updated EMAs from the daily. Here we see that bearish divergence in RSI and PPO. We've got a steadily higher price at a lower RSI and PPO. We've popped above this 2-hour channel. What you would want to be concerned about is dropping back into the channel here below 332. That would probably favor a bear cross here in momentum. That would favor a trend line break in RSI, and then you'd probably get a pullback into 330 and probably just as likely to the midpoint of this channel down towards 328. So remain on guard. Right now, we continue to grind higher, but all things eventually come to an end. So watch your trend line here, watch your indicators. Once we fall back into the channel, then your targets become the midpoint of the channel and potentially the bottom end of the channel. You can look back over time, top of the channel, bottom of the channel, top of the channel, bottom of the channel, pop outside, drop below, bottom of the channel. So they call them channels for a reason, right, guys? So once you're at the top, once you fall back, then the bottom of the channel becomes your target. So be ready for that cycle, and then you can, that's the essence of being a two-way trader is, once you fall back down in, then your bias can be towards a pullback and then looking for a long entry as we drop below, maybe fill this gap. That would be a great place to buy down at 322 after a pullback to the bottom of the channel. Fill this big gap, get a tag down in here. Most of the world will think, everything's falling apart. Place your objective long here with a stop just below, and then see if we get a push back up to the top of the channel. So that's just a scenario to think about. 30-minute chart, we've got this little wedge forming. I've put a support line here at 332. Let's just watch it. I mean, the bias is higher right now until price gives us some evidence that there's going to be a turnaround. We don't see it yet. So your first sign of that would be a drop below this wedge here at 332-ish. If we lost 332, then there's another ledge here at say 330.75 and then 329. So potentially be ready for that on the Qs. Really, the action has been all with the IWM. I mean, it was up 2.55% yesterday. The Qs were up 0.67. So, I mean, they're outperforming on a daily basis 2 or 3 to 1, sometimes 4 or 5 to 1, depending on the day. Really steep advance. Normally you'd say, is that really sustainable? But, this was a steep advance here as well. And, this is people getting behind that reflation, reopening, value trade. As we've talked about many, many times, cruise lines, restaurants, financials, commodities, value trade. Those are all in that general basket of reopening, revalue, rising interest rate environment, etc. So if we see rates back off, that may put a damper in this IWM trade. So trail up your stops. Realize this thing is, getting overbought. That's not a reason to sell. Let's wait for price to give us a clue. I've got a little shelf here at 226, and then the top of the gap at 223.40 would also be a important level if we get a back test there. And if this gap were to fill, I would be certainly looking for long entries, not short entries, for longer time frames. Sure, you can do it. You can do a tactical short, anytime you want. If you lost the bottom of the gap, probably going to come down here to 218. That would be a nice trade, $4 trade. But in general, longer term, bigger picture, look for long entries and keep your shorts to tactical trades where you can, do a little hit and run trade and then get back long for the upcycle. 30-minute chart, same thing. Here's our uptrend line. Got a couple support levels. Notice this void here in the volume over price. If we were to lose 225, not a lot of support here. I mean, in fact, almost none. Back down to the gap and then for a gap fill. So that would be, if you're a tactical trader, if you're active during the day, make a note at 225 that might be a nice level for a tactical short down to test and possibly fill the gap. I'm going to run through FANG real quickly. This has been a frustrating set of names here lately. They've gone dormant. Not saying you can't figure out a trade, but it's been choppy. It's been frustrating. I've been caught up in a couple of trades with Microsoft that just haven't worked. So let's take a look at it. Facebook yesterday, opening candle, had a reach up to 270, which is our well-defined level, and was rejected. If you were nimble and Johnny on the spot, that's a place to initiate your short, and you got a $5 move out of it. That would have been a great trade. Not saying it's particularly easy, but if you're a tactical trader and you're focused on it and you know your levels, that would have been a place to try that at 270 resistance. You got the fade, the one touch, and then you got to move all the way back down to the bottom of the range at 265. Got a $5 move. So now the range is 265 to 270. I did make a slight adjustment in this level. I had it at 266. I moved it down to 265 to capture these reaction lows. If you're interested in Facebook but you're not interested in trying to figure out this chop, set yourself some alarms at 270 and 265. And if you get a move outside of that range, then I think you've got a better chance at a meaningful move on your trades. But in here, it's been, a lot of chop. And unless you're, sharp on top of it, it could be a frustrating trade. So keep that in mind. Apple, very much the same thing. Yesterday, we had a look below this 135.50 on the reclaim. That was your buy signal, and you got $1.50 out of it. In the whole scope of things, that's not a whole lot. Here, I would be setting alarms at 138 and either 135.5 or 135 for a break below, and just say, you know what, let it thrash around in that $3 range for as long as it wants, and I will be ready on the breakout to 141 and higher ground, or if it's going to give up the ghost, I will be ready at 135.5 or 135 for a move down to 133 or lower. Notice this PPO signature. It looks like it wants to roll over, but it's not definitive. It's just thrashing around here, so not a whole bunch of takeaways. Tesla, this was on the opening candle on the Musk Bitcoin deal. If you were nimble and you were focused, you got a reach up candle right to 880 that was rejected, and then you got a $25 move back to the midpoint of the range here at 855. Again, you had to be quick and you had to be ready and you had to know your levels, but that was your entry. Top of the box is resistance until it isn't, so that would have been your short entry there. And then here at the bottom, you can be long against 855 and then look for a move back up to 880. But like I said, if you don't want to mess around with all that, you can set yourself an alarm at 855 and set yourself an alarm at 880. Be ready for the breakout, which points to 960. And if you drop down below, you may get a move down to 830. But I'd be more inclined to be looking for longs than shorts on Tesla. It's been so strong lately. Microsoft, I told you, this has just been an absolute chop fest. And it's nicked me a few times over the last several trading days. Not saying I'm giving up. I think above 243, it's got a chance for 250, but I don't think it's going to go there independently. I mean, if Facebook is dead and Apple is dead and Amazon is dead and everything else is dead, kind of have a hard time seeing Microsoft, making a run to 250. So I'm going to lay low, kind of size things up, and wait. May even wait for this 244 to be taken out, this prior high. But yeah, I'm going to put that in the basket with too frustrating to trade right at the moment. So going to let that go. Still got it on the radar. Still have some alarms. And if the Fat Man trade perks up and we get a breakout, I like Microsoft. It's one of the only ones that did not sell off after earnings, and I think there's some underlying strength there versus the Facebooks and the Apples that did sell off. So I have that on the radar. Amazon, the free 50 club strikes again. First candle, 33.60. When it lost 33.50, that was your signal to get short, and you got your move to 3,300, which was your free 50 club. Every day, free 50. Buy 3,300, wait for 3,350, loses 3,350, comes back to 3,300. If it loses 3,300, it's going to 3,250. I mean, if Amazon is your thing, you gotta be loving this because it's been working so well, these $50 increments. So set some alarms if you're interested in that. These levels have been working great. If it's too choppy for you, that's fine too. I would still say, if you're gonna take the approach, I'm gonna wait. I think 3,300 is still a great level to alarm on the downside. And, if you wanted to raise up your alarm to, say, 3,370 at this prior high, that would be fine too. If you wanted to, buy that breakout at 3,370 and then look for the mid 3,400s, that would be fine. But I think 3,300 is an important pivot here. Notice the large volume over price support bar here. If it were to drop down below, then I think you're definitely coming into this 3,250 and possibly all the way down here to 3,200. Fill this gap and then back test this prior low. So have that be on your radar. Google still consolidating the breakout. 2,100 to 2,050 is your range. If you're not interested in trying to trade that, set yourself some alarms and then wait for either the breakout or the breakdown to take a longer term trade. Netflix, soggy as well. Just thrashing here in a tight $10 range between 545 and 555. I would be setting an alarm at 5250 or 552.50 or 555 and then 545. Let it thrash around here. Don't get in the chop. And then if you get a definitive breakdown or a definitive breakout, then you can look for something a little more substantial. But I'd be avoiding this chop. It's been soggy and not really doing a whole lot. Let's look at gold. Here's the high that we had back in August, and since then it's been a slow drip lower. And this was the recent breakout that got me and a lot of people excited. And then We had that real bad day where it was down $100, I think, maybe even a little bit more on that day. Slammed it down to support, and here it's been choppy for the last month, really since the beginning of 2021. We had a plunge here last week down to this prior low. I don't have it marked here, but I do have it on the minors. Notice this double bottom with bullish divergence. Here's your initial low, and your second low was at higher momentum. Same thing on RSI. Here's your initial low and the secondary low at higher RSI. So if you were Johnny on the spot, that would have been a good place to take the trade. Now what we got to see in gold, we're above the 200, but below the 20 and the 50. You really got to see this downtrend line and the 50 EMA taken out at 174. I think that would be the next buy trigger. Other than that, we could see more chopping around between, say, 174 and 171 at the 200, and then we gotta get this breakout to get gold back on track. But like I said, if the dollar rolls over, that's going to be a catalyst and a tailwind for gold. So watch the dollar if you're interested in gold. And here's the miners. Very much the same chart in structure. Here's the recent double bottom with bullish divergence on RSI and PPO. Prices below the 200 and the 50 EMA in green. To really get this going, we got to have a breakout above 36. And if you wanted to set yourself an alarm, that's where I would set it, at 36. If you take out this lateral resistance along with downtrend resistance and get price above all the moving averages, then you got some room to run. Notice also you've got a relative volume over price void here where there's not a lot of overhead resistance, and that should carry price back up towards 38.50 or 39 as a target back at this prior high and at VOP resistance. So that would be the initial target on a breakout of 36. So set yourself an alarm there. I've done that, and if you're interested in trading that, set yourself an alarm. Okay, let's do a quick recap. Major market averages are flat as we enter, the pre-market session here. We're 2 hours before the open. Let's see how we open up. Gold is higher on a weaker dollar. Watch for follow through on the dollar. See if it rolls over. If it does, that should be a tailwind for oil, a tailwind for commodities in general, but a headwind, for the reflation trade if yields back off, which is often the case with a falling dollar. I do make note in the blog post this morning, there's a 3-year bond auction today, but that's not going to mean anything. Tomorrow, there's a huge 10-year auction, and on Thursday, there's a huge 30-year auction where the Treasury is coming with unprecedented supply. So we'll see if the buyers show up. If they don't, yields are going to be creeping back up again as buyers want a higher yield to make that buy. And that'll be important as far as near-term direction for bond yields. And if yields rise, that reflation trade will get a boost. If they fall, then you may see weakness in the banks and some of the reflation trade ideas, and that may hit IWM a little more than the other indexes. You can watch KRE and XLF on the financials to see if you can pick up a trade there if you get the sense that yields are going to be falling in the days and weeks ahead. As far as the indexes go, the rising trend continues. Don't be afraid to take a tactical short, but you should be looking for longer term long entries. I think the bias is still higher. We have no evidence at all to think that it would be lower. I marked the support levels on the charts. Take a look at those. And in the FANG trade, even if you're an active trader, don't get frustrated and chopped to death waiting for something to happen that's just not going to happen. Don't try and force it. Set yourself an alarm at the outer levels of the trading range, and then be ready to take either a breakout or a breakdown when price tips its hand and lets us know where the next real move is going to be. Recently, the chop has made those names frustrating. And if you're looking for, other names to trade, feel free to do that. Just set your alarms and be ready to revisit FATMAAN trades when and if they are ready to move again. And as we've seen in the past, they can wake up at any time. So thank you for being here this morning, especially new viewers. If you've liked what you've heard, why not hit the subscribe button and the alarm bell? You'll get all my content each and every day and at midday when I publish. Also, jump over in the show notes for convenient links to the blog post where you can read in on some of the stuff that I write about related to the market, and also a place to subscribe to my content where you'll get everything I publish, videos, trade ideas, trade updates, everything right to your email box. You won't miss a beat. Be great to have you, and I'll send you a link to our trading room, which continues to be vibrant and full of trading ideas and good camaraderie amongst aspiring traders. We'd love to have you. So let's wrap it up there. This has been Chris Buss with Trader's Profit Compass. Have a good trading day, and talk to you next time.